Ladies and gentlemen, welcome back to another Bitcoin update. We had previously on Bitcoin over the last few weeks, the head and shoulders market pattern threatening the Bitcoin structure, throwing us down, or threatening to throw us down to 19K. We now have a new bear case emerging because we had obviously the breakout on Bitcoin, very, very bullish breakout. We have a new bear case emerging in regards to the total cryptocurrency market cap still being at major resistance while Bitcoin is breaking outwards. Now, the bears are claiming, or the bears would claim that this means that Bitcoin is actually at hidden resistance and that this whole breakout has been a scam. So we'll look into the validity of that argument in the second part of this video. But in the first part of this video, I'm going to look at the Bitcoin structure, what we've seen, and also the very, very interesting short-term charts. We have a contradiction on the short term. We have an ascending triangle formation, which suggests we go upwards to 38K. But then we also have the momentum indicator suggesting we go downwards for a 32K retest. So again, a big contradiction there in short term. So the big topics today are recapping, short term, and then the bear case. Big stuff to get into today, guys. Let's get into it. Alright guys, before we get into today's video, we're going to check out the VIP group on Telegram. We trade altcoins on Telegram VIP, scalp trades and swing trades. We also have access to a 24/7 VIP discussion group where any VIP member can, chat with other VIP members 24/7, post charts, news articles, etc., discuss the market, discuss VIP trades. It's been very useful in there. It's very good value, so you can check out the pricing information. You can also check out the 30-day free trial and also our trading results, which we're running at an 80.58% win rate, which is pretty bloody exceptional, to be honest, if you think about it. It's 4 out of every 5 trades reaching profit. So that's very, very good. 80.5% win rate there. Check it out, guys. The link is below in the description. And then we'll get into the content today. Okay, so we'll start off with just recapping what's happened on Bitcoin. It's been pretty recent. A couple of days ago, Bitcoin saw some of the best price action it's seen in a long period of time. We saw one singular daily candle, okay, the one just here on Monday, 23rd of October here, clocking in at around a 3,100 USD gain from close to close, which is probably the best. Look, I haven't actually fact checked it, but it's probably the best in terms of size, a daily candle we've seen for a very long period of time. I'm talking maybe years potentially. So good stuff there. And obviously in breaking above, or in seeing that candle, we actually managed to break above our range that we were in for 7 months. This chart is color-coded for a reason. The color-coded zones, the color-coded rectangles represent range-bound constructions on Bitcoin. We had a range we were seeing for 7 months between 32K and 24.5K. As you can see, 7 months from March all the way through to late October. We broke above that range just recently on that daily candle, and that's absolutely excellent because that means we're not at risk of forming a head and shoulders market pattern anymore, which we're at risk of forming, which would have brought us down here to 19K. So we completely invalidated the bearish scenario. On this Wolves of Crypto YouTube channel, we flipped bullish the day before the big move. We flipped bullish on Sunday, and on Monday we saw the biggest daily candle we've ever seen. Well, not ever seen, but seen in years at least. So absolutely exceptional, accuracy there from the Wolves of Crypto YouTube channel. Congratulations to you guys who kind of kept in line with what we're talking about. But now, obviously, we've seen a real break to the upside, a break above this green box into this kind of pink zone here. Now, this pink zone is very, very vague, and it's like that for a reason. I don't think that in this kind of region of the market between 32K and 68K and 69K, there's any real clearly identifiable ranges such as what there were down here. In fact, it was actually a very simplistic market from a macro perspective, all the way from around May last year to around October this year. The ranges were very clearly defined. I mean, we had very, very clear, for example, the bottom was found here. There was a very clear retest of the top of this range at 18.5K. We tested out for support on multiple occasions. For example, 24.5K was tested on multiple occasions. We came up, we tested it again on multiple occasions. And for example, 32K was rejected from a couple of occasions, and we tested it briefly before breaking upwards. The fact of the matter is they're very clearly identifiable ranges. There's not really, and this is where we get into complex territory, due to the massive volatility of this entire price region here in pink, which is a good thing because volatility is good, and bullish volatility will mean that the price action will accelerate faster to the upside. So that's a good thing. So that's the pro, but the con is there's no real clearly identifiable ranges in the same way as there were clearly identifiable ranges down here. So we're kind of working with sketchy TA. And we need to wait for short-term confirmation of the resistance and support zones as we test them. to kind of revalidate and reconfirm TA, because this TA, all this support resistance from back here, that's a 1.5 year old minimum now, and we're just breaking back into that region again. So we're kind of going into a price region that hasn't been, entered for a long period of time. We're kind of in the dark a little bit with it. And on top of that, there's no neat defined ranges like what we've just had. So although we had a pretty much boring, let's be real, it was pretty boring, period of time for the last 1.5 years. I mean, there was interesting components to it for sure. At least it was clear and identifiable. But now we're kind of getting into that kind of muddy, murky zone. But however, it is definitely bullish. We had to get above that. Now the volatility should start to increase. I mean, you can just see it quite clearly, ever since, if you look at all the price action in this pink range, look how big the candles are, look how long the candle wicks are, you look at the price action down here, look how small the candles are, small the candle wicks are. It's no surprise that right now is bullish, because we're entering a region which we've seen historical high volatility, throughout the entirety of the 2021 bull market. So it's good to see Bitcoin break upwards. That's exactly what we've seen. Now, I'm not going to sit here and act like Bitcoin, for example, is destined to go higher in the immediate short term. I don't think that's necessarily supported. I think that there is a very decent, very honestly probable chance of a correction from this price region. What I do know, though, by the way, is that, I'll get into that argument in a second, okay? I just want to kind of clarify something. The next major resistance we have, right, that is identifiable, is this red box here. That red box is between 38k, okay, and 37.5k. That is the next major zone that is kind of pressing matter, because that's where we found, for example, resistance over here in 2021 briefly. We also found clear support in 2021. We also found clear support over here in 2022. This is the next real proper identifiable resistance zone, 37.5 to 38k-ish. Okay, but we're not there yet, and so we're kind of in this in-between phase between 32k and between that next important level, and we do have a brief resistance zone at around 34.5k, which is validated on short-term charts. You can see we saw a double rejection, kind of a double top formation from that level on the same day, and that validates that resistance zone. So 34.5k roughly is a short-term, medium-term resistance, but the major resistance is actually much higher above us. But it's not surprising if we did see, excuse me, if we did see a rejection from this region, come back down for a resistance support flip of 32k, and then go upwards from there. It's not surprising at all. Now, that could take a decent amount of time for us to see that, but we do generally see resistance support flips of major support zones once we've taken them. For example, when we got above, if you're looking at down here in this price region, when we got above 24k after rejecting from it on 2 occasions, okay, we finally got above it, and we went upwards, and we kind of jumped around for months, and then we went down, resistance support flip, and then we went upwards again. So it's not, it wouldn't be surprising to me at all if we do see a resistance support flip over the next couple of weeks of that 32k zone. It doesn't need to happen, and the strength of this move means it certainly doesn't need to happen, but it certainly could happen, and it generally happens. I mean, that's kind of the conclusion. So if we go back down to something like 32k, I wouldn't be threatened by that. I wouldn't be very uncomfortable with that. If we lose 32k, however, we go down below 32k, close the weekly candle back below it, that's when you start to be bearish on Bitcoin once more, because that's when we would have broken back, okay, into the previous macro range after breaking it. So we don't want to be breaking back into the previous macro range. We've got 4 days until the weekly candle close, and if we do that within the next 4 days, that's actually ultra bearish, because it means we wouldn't have closed a weekly candle above the macro range, and it means we'd still be stuck in this green box. So realistically, okay, you could actually make the argument that this breakout above 32k is not confirmed yet from a technical level. You could actually still make that argument. Now, I think there is probably reasonable confirmation at this point, but I know some people, for example, who are traders, who are analysts, are waiting for that weekly candle close before making any Bitcoin moves. And I don't necessarily disrespect them for doing that. I think it's a reasonable case to make. If you're waiting for a macro break, you better get a macro close, and a macro close is a weekly candle close, really. So, yeah, technically speaking, this is an unconfirmed breakout at this point in time for all intents and purposes, I think it's pretty safe to say this is a breakout. It's interesting, right? Because look, the community, and this is from a community, my community, where I'm actually bullish right now. they say that 32K on a 57% basis, right, with 1,000 votes say that 32K will not hold. So most people are actually bearish right now, which is interesting. And it's interesting because the bear case, the bearish argument has always been for months and months and months and months. The majority is always wrong. Well, guess what? Even on a bullish YouTube channel, the bearish people are the majority. So that argument doesn't really work, doesn't it? And also, the argument doesn't really work because the majority of people is not the majority of capital, okay? And if the majority was always wrong, we wouldn't see any trend ever. Because if you think about it, okay, who's been right in this entire price region for last year? Technically the bulls. And the bulls have also been the majority because they've been the majority of capital. And if they're the majority of capital, they're making the majority of decisions in terms of capital-wise, in terms of where the volume is flowing. And they're buying. And the price has gone upwards because of that. So the whole majority is always wrong argument is completely flawed in itself. So I just want people to know that and just discard that argument from the vocabulary because it's overused and it's ridiculously low IQ argument. It literally makes zero sense if you look into it for more than 5 seconds. But yeah, again, on a short-term basis, I think that it's reasonable to assume that Bitcoin could reject here and go downwards. We do have bearish divergence coming through. We do have things like volume slowing down massively from the original breakout, descending volume there, even though we have an upwards trend with high highs, we have descending volume, that's bearish. Add that in with bearish divergence, add that in with the fact that we've got some sort, who knows what it is, but it's some sort of potential ascending wedge or something forming. You could even say it's some sort of symmetrical triangle formation, in which case it'd be bullish. You could say it's an ascending triangle formation, in which case it'd be bullish. But look, I'm not going to go ahead and assume that it's something like that. At this point, I would just assume that this is some sort of, honestly, double top formation seems reasonable, especially when you're considering bearish divergence with the descending volume. I think assuming this is a ascending triangle is a little bit of a stretch. I mean, technically speaking, it does have the structure of an ascending triangle, right? Something like that with a flat top. So, I mean, you would be technically correct if you said it's an ascending triangle. But again, given the fact that we have bearish divergence and descending volume and the fact that we've had such a large move in such a short period of time, it wouldn't surprise me if this ascending triangle fails. Keep an eye on it though. Look, I'm not one to predict breakouts. I'm one who trades breakouts. If we do actually come up and break above the top of this ascending triangle, and that could be a position for a long, because that would be an indication that the market's not done yet. That would be an indication that the market actually wants to go straight upwards and retest 38K. As I told you guys before, the next major resistance is 38K to 37.5K. So if we do actually have an ascending triangle here in short term, it could just be a sign that the market's not done moving yet, and the market just wants to go straight to that level and then reject from there and go downwards from there, instead of stopping in the halfway up. So it's not outside of the realm of possibility. But I mean, far out, that would be incredibly bullish. I mean, that would mark a 10,000 USD move on Bitcoin within a matter of a week, which is just unprecedented at this point in the market cycle. So we'll keep an eye on this ascending triangle formation. Technically, it is an ascending triangle. As I said, I wouldn't get your hopes up about it necessarily, but it is something to monitor. And I certainly wouldn't be taking short positions until we actually break down below it, as well as break down below that red line at 34.5K. Once we get both of those things, then you can start taking short positions. But until then, I'd be waiting for confirmation. But actually, it's something that I haven't really emphasized enough in this video. I probably should have brought it up at the start. The short term is actually incredibly interesting because of that, because there is that contradiction. There's that ascending triangle, which says we go upwards higher, and then there's also bearish divergence, descending volume, and the potential double top formation forming, which says we go downwards. So, which one is correct? I mean, that's an interesting question that will have to be answered. But to end off today's video, I want to actually look at the total cryptocurrency market cap. But before we do any of that, so we've got a lot more to get into really. Before we do any of that, we're going to check out Bitget and Bingx exchange. I'll start with Bingx. Bingx is a global exchange. You can sign up from anywhere in the world with just an email address and a password and get access to straight exchange with very, very low trading fees. Bitget is similar for all intents and purposes, but it's KYC and it's global except the USA and Canada. So again, Bingx is global. Bitget is KYC, global except the USA and Canada. So check out these exchanges. For both of them, using my referral links, you get the same discounts and rewards. 15% trading fee discount for life, which can add up to be thousands of dollars over a long-term period. And then you're also getting an exclusive reward center with thousands of dollars in rewards and bonuses for doing various tasks for both these exchanges. So Bingx, Bitget, check them out. Let's get back into the content. Again, quite a bit to get into. I'll skim through some of it and we'll look in-depthly into some of it tomorrow as well. So, all right, let's look into it. We'll also look at S&P 500 tomorrow and total cryptocurrency market cap and also the monthly returns chart. These are the two charts I want to discuss for the rest of the video today. Total cryptocurrency market cap chart is very, very interesting, okay? Okay, so here's why. Total cryptocurrency market cap chart is a chart that measures the entire USD valuation of the entire cryptocurrency space, Bitcoin and altcoins, every single coin in the cryptocurrency market in one USD value. Currently, it's at 1.246 trillion, which means $1.246 trillion is in the cryptocurrency space currently. That's the valuation of the entire cryptocurrency space. Now, this chart obviously is then very important because it's very much linked to Bitcoin, but it's actually almost more important than Bitcoin in a sense because it measures the health of the entire cryptocurrency market rather than just Bitcoin itself. Of course, Bitcoin leads the market, and hence these charts look very similar. For example, the Bitcoin chart here, total cryptocurrency market cap chart, you can see they're very similar in structure. But namely, the most similar component of them in the last year or two, or the last 2 or 3 years, I should say, is the dividing line. For example, we had the dividing line on Bitcoin here between 29K and 32K, the red line, which kind of divides the bull market territory from the bear market territory. And as you can see, in the last week, the reason why the last week has been so major is because we've broken above, that dividing line, and we've re-entered kind of that bull market territory. Now, that doesn't mean we're in the bull market. Okay, very important linguistic distinction. We're not in a bull market right now. It just means we're in the bull market territory. Bull markets only occur after the halving per 4-year cycle. But we have broken above the dividing line, and hence we're not at resistance anymore. We're not at major macro resistance like we were for so long anymore. The problem with this is that the total cryptocurrency market cap has a dividing line as well. And the total cryptocurrency market cap, which found resistance at its dividing line at the same time as Bitcoin. It found resistance in April. It found resistance in July, just like Bitcoin, right? April and July found resistance. It found support back here, in January 2021. It found support back here in July 2021. It found support back here in May 2022. Just like Bitcoin, right? Just like the cryptocurrency market cap, it found support in January, found support in July, found support in May. These charts are very, very well connected, and when one of them's at resistance, both of them are at resistance. Now, the problem with the charts now, and something you really need to keep an eye on, everyone needs to keep an eye on, is that there's been a deviation now, right? For the first time in a long time, there's been a deviation where Bitcoin, okay, has made a move. Bitcoin has broken above this resistance zone, okay? And the total cryptocurrency market cap is still at resistance. Now, historically, when you see something like this, it actually means that Bitcoin is still at resistance. It's just not reflective of chart. So the new bear case, right? The bear case we had before was the head and shoulders candlestick formation, for example, which was at resistance, and Bitcoin was going to go downwards from there, go to 19K. That was the previous bear case. The new bear case is that this move on Bitcoin, okay, is actually a fake move, and we're actually at hidden resistance that only shows on the total cryptocurrency market cap. And so the new bear case says that until the total cryptocurrency market cap breaks above its resistance zone, Bitcoin is actually at resistance and it's not actually in a breakout. This is all scam. All right. That's something we need to keep a close eye on because I cannot actually debunk that argument. All right. I can't debunk it not because it's necessarily correct, but I can't debunk it because historically that's just generally true. So Bitcoin, technically speaking, is actually at resistance, which adds to what we were saying before about short-term correction. It is possible we see a short-term correction for that reason. And if Bitcoin goes upwards further, obviously total cryptocurrency market cap will go upwards further, and we'll see total cryptocurrency market cap breakout as well. So what we actually want to be seeing on Bitcoin now, on total cryptocurrency market cap, is a breakout above this red box. If we do that, that will be good for Bitcoin. These charts are very much connected, guys. You have to remember that. Now, so the bear case is Bitcoin's at hidden resistance, basically, which is only present on this chart here. But the bull case and the bullish argument, the bullish rebuttal, I should say, would be that Bitcoin generally just moves quicker and moves faster, and the total cryptocurrency market cap catches up eventually. And you could support that argument by looking at the time in which we broke down from this support zone. So, for example, back here, this was a support zone instead of a resistance zone. We broke down from it on Bitcoin on June the 6th, okay? But on total cryptocurrency MC, we actually broke down from it on May 23rd. So again, there was a deviation. This time it was the other way around. It was the total cryptocurrency market cap that broke down first, which led to Bitcoin breaking down. And hence you could argue that since there's been deviations in dates in the past, us deviating here with Bitcoin breaking upwards first just means that the total cryptocurrency market cap will have to catch up eventually. It doesn't mean that we're going to reject on both charts. So we'll have to wait and see. But, it is interesting to watch, and we'll have to be watching that closely because that is certainly a bear case that could be made right now. The last thing I want to look at is the monthly returns chart on Bitcoin. We're coming towards the end of October, and now we're 27% in the green for October. So the statement Uptober instead of October, which means basically October is generally green. So we're going to see another green one this month, has been proven true. It's great to see October, be a good month, and it's very unlikely it's going to be red now unless we drop massively in the next 5 days, which is very unlikely. So great October we've had, and that kind of validates the idea of these monthly return charts being quite important. And so if we look in future for monthly return chart trends, for example, green Octobers, red Septembers, we can start to kind of take them a bit more seriously because they've been valid over and over and over again. Even last month, right, which was meant to be red September, it wasn't actually red, but it was only a 3% gain. So it did kind of, it played the part quite well, right? Where September's just boring or downwards. And as we get into the next month, what is the trend for November? Well, November is actually a very mixed bag, so we can't really identify any clear trend for November other than the fact that November is volatile. Because if you look at the historical returns in November, we've had 10 Novembers and only 2 of them have had single-digit returns. So we don't know which way the market will go in November based purely on the monthly returns, but we do know it would be volatile. And if we're looking at what Bitcoin has done in regards to breaking massive resistance, we could actually say that it would be volatile in a bullish manner, but we'll have to wait and see on that regard. So I'm going to end the video there, guys. Thank you for watching. So I'll give you guys a quick summary of what I said in this video. Firstly, we went on and we mentioned that Bitcoin has broken above its range-bound construction into a fresh range, a range that is generally less concise, less easy to predict, more kind of murky, but also more bullish and more volatile. We've also got a breakout from a daily chart perspective, reaching medium-term resistance at around 34.5k, but we do have that major resistance up here at 37.5 to 38. We have a kind of conflicting market pattern on the short-term charts, an ascending triangle formation, which is bullish, but also seeing some bearish momentum indicators surrounding that, and so we're waiting for the break there to see what happens for a nice long or short position. And then we're looking at a breakout on a macro basis again, from the line in the sand on Bitcoin, and that not being reflected yet on total cryptocurrency market cap, and that being a potential bear case for the cryptocurrency market that we need to monitor. And then finally, we looked into monthly returns chart. Tomorrow, we've got various charts to look into as well. Ethereum, 1,000-day resistance breakout. We've got weekly chart on Bitcoin in terms of bull market support band and all that kind of stuff, and Gaussian channel. And then we've also got S&P 500 to look at as well, including any short-term updates we see from a break of this triangle. So very important video coming tomorrow as well. Guys, thank you for watching. Check out the Crypto Academy if you want to learn how to trade, you want to learn how to analyze charts like myself. We've got the Become a Trader 10-unit course, which, as per the name, teaches you how to become a trader. You can read the bio of the course on the website and also read about the unit topics and what exactly you get for the course in terms of content, slideshows, videos, worksheets, the number of slides, the number of videos, the number of worksheets, a trading diary, all this stuff you're getting for the course, as well as the contact information is on the website as well. For contact details, ask us any questions, request payment information, anything you want to do there. So guys, thank you for watching. Hope you enjoyed, and I'll catch you in the next one tomorrow. Cheers.